Sam Zell's billion-dollar mindset, how thinking against the crowd built an empire. Introduction. Have you ever wondered how some investors manage to build billion-dollar empires by doing the exact opposite of what everyone else is doing? This is the story of Sam Zell, one of America's most unconventional and successful real estate investors. Known as the Grave Dancer, Zell earned this eerie nickname by buying distressed properties when no one else would touch them. While others ran from chaos, he walked straight into it and made a fortune doing so. But this isn't just a story about money. It's about mindset. It's about how thinking against the crowd, when done with precision and discipline, can lead to extraordinary success. Zell didn't follow trends. He anticipated them. He didn't chase the boom. He prepared for the bust. Born to immigrant parents who escaped Nazi Germany, Zell understood early what risk and resilience meant. By his 20s, he was already flipping real estate deals while attending law school. But it wasn't luck that made him a billionaire. It was his philosophy. He believed that real opportunities lie where most people see fear, failure, or uncertainty. In today's volatile market, when everyone's talking about safe bets, passive income, and waiting it out, Zell's legacy challenges us to think differently. What if the best deals are where no one else is looking? In this video, we're diving deep into the remarkable life of Sam Zell, the man who danced on the graves of failed investments and built a real estate empire worth billions. From his early days hustling apartment deals in college, to pulling off one of the largest real estate sales in U.S. history, this is a blueprint for anyone who wants to think bigger, act bolder, and win by playing a different game. If you're ready to discover the mindset that separates legends from the rest, make sure to hit like, subscribe, and stay with us, because what comes next might just change the way you look at risk, wealth, and opportunity forever. Chapter 1. From Immigrant Roots to Billionaire Visionary. In the heart of Chicago, long before the world knew him as the Grave Dancer, a young boy named Shmuel Zilanka was growing up in a household shaped by survival. His parents, Jewish immigrants from Poland, had narrowly escaped the horrors of Nazi Germany during World War II. They arrived in America with little more than their lives and an unshakable drive to rebuild. Their son, renamed Sam Zell, didn't grow up with wealth. But he grew up with something more powerful, a deep understanding of risk, resilience, and the urgency to seize opportunity when it appears. That mindset would become the cornerstone of his life's work. Sam Zell's father, Barek Zilanka, was an entrepreneur in his own right. He ran a jewelry business and later a wholesale liquor company. From him, young Sam learned the language of commerce. But it was the immigrant experience, the sense that everything could be lost again, that gave Sam his hunger to create something enduring. Not just wealth, but freedom. Zell's first real taste of business came early. By age 12, he was buying Playboy magazines in downtown Chicago and reselling them to his suburban friends at a markup. It wasn't just about the product, it was about spotting a gap in the market and being bold enough to fill it. By the time he entered the University of Michigan in the early 1960s, Zell was already looking beyond textbooks. He began managing properties for a local landlord in exchange for free rent. But that wasn't enough. Zell saw inefficiencies and opportunities others ignored. So he started buying small student housing units, fixing them up, and renting them out. By the time he graduated from law school, Sam Zell and his business partner Robert Lurie had built a portfolio of over 4,000 apartments. Most law students left school with student debt. Zell left with cash flow and a real estate empire in the making. And yet, Zell never practiced law. "I hated it," he later said. I only went to law school because it gave me 3 years to figure things out. What he figured out was far more valuable: how to identify undervalued assets, manage risk, and create long-term value, not through hype or speculation, but through vision and execution. This was the 1960s. Real estate was still an old boys' club, dominated by families with generational wealth. Zell was an outsider, both in background and mindset. But that outsider perspective gave him an edge. He didn't see rules, he saw opportunities. He wasn't tied to tradition, he was tied to results. More importantly, Zell developed a belief that would define the rest of his career: liquidity equals value. In simple terms, if you could make an asset tradable, financeable, and manageable, you could unlock hidden worth. That belief would later lead him to revolutionize the real estate industry through the creation of publicly traded real estate investment trusts, REITs. But back in the 60s, Zell was still sharpening his tools. He made bold bets on overlooked properties, always watching the cycles, always questioning conventional wisdom. Where others saw crumbling buildings, he saw cash flow. Where others feared recession, he saw entry points. Sam Zell wasn't fearless. He was calculating. He knew that risk was part of the equation, but only when paired with control and timing. He wasn't chasing high-risk ventures. He was simply willing to go where others wouldn't. That's what made him different and dangerous in the best way. Zell's early years were filled with contradictions. He was a law graduate who never wanted to be a lawyer, a real estate investor who often looked outside the real estate world, a brash personality who believed in data, fundamentals, and discipline. But through it all, there was one constant: a relentless drive to see value where others saw trouble. By the 1970s, Zell had already established himself as someone who could build wealth from broken pieces. But he was just getting started. The economic turmoil of the coming decades would test his theories and create the conditions for one of the most legendary careers in American business history. Sam Zell didn't come from money. He didn't fit the mold. And maybe that's why he succeeded. Because when you don't start with privilege, you're forced to build your edge from the ground up. Zell's edge was vision, grit, and the courage to go where others feared to tread. This chapter of his life isn't just a rags to riches tale. It's a blueprint. A reminder that great success doesn't come from following the rules. It comes from understanding the game well enough to rewrite them. And for Zell, the game was just beginning. Chapter 2: The Grave Dancer, Mastering Chaos to Build Opportunity. In the early 1980s, the U.S. real estate market was in free fall. High inflation, rising interest rates, and a sluggish economy had left buildings empty, developers bankrupt, and banks desperate to get bad assets off their books. Most investors ran for the hills. Sam Zell ran straight into the fire. It was during this period that he coined the nickname that would follow him for the rest of his career: the Grave Dancer. A name that sounded more like a villain in a Wall Street thriller than a serious investor. But for Zell, it was a philosophy and a strategy. Zell once wrote an essay titled The Grave Dancer, where he described his approach as buying the remains of failed deals, not to exploit tragedy, but to breathe new life into assets that had been abandoned. "I am dancing on the skeletons of other people's mistakes," he wrote. The key word wasn't grave. It was dancer. Zell didn't prey on failure. He moved with precision through market chaos, understanding that timing, discipline, and courage were what separated winners from the herd. What made Zell unique wasn't just that he bought distressed assets. It was how and when he did it. He didn't buy anything just because it was cheap. He only acted when 3 conditions aligned: The asset was fundamentally sound, even if poorly managed. The market had overreacted with fear. He had enough control to turn the situation around. In other words, Zell didn't bet blindly on a rebound. He bought assets he could control, in markets he could understand, at prices that left him room to win, even if things got worse before they got better. Take, for example, the real estate collapse of the late 1970s and early 80s. While traditional developers were stuck with half-empty office buildings, Zell saw a buying spree. Using investor capital and his own war chest, he acquired distressed properties in prime locations at a fraction of their replacement cost. He wasn't just buying real estate, he was buying time, leverage, and optionality. The media called it risky. Zell called it obvious. Everybody else was frozen, he later said in interviews. They couldn't move. I wasn't afraid. I had liquidity. I had control. And I had conviction. This conviction allowed him to grow his company, Equity Group Investments, into one of the most aggressive real estate acquirers in the country. But Zell didn't just stop at real estate. His contrarian instinct pushed him into industries most investors considered untouchable: manufacturing, energy, transportation, and media. If it was out of favor, he wanted a look. Zell's boldest move during this era was his role in the creation and expansion of Equity Office Properties Trust, a real estate investment trust, REIT, that revolutionized how real estate assets could be packaged, traded, and valued. Zell understood something few others did at the time. The future of real estate wasn't just bricks and mortar, it was financial engineering. With REITs, Zell could scale faster, attract institutional money, and give investors liquidity. By the late 1990s, Equity Office was the largest office landlord in the United States. And just a few years later, in 2007, he pulled off what would become the largest leveraged buyout in real estate history, selling the company to Blackstone for $39 billion, right before the global financial crisis hit. It was classic Zell: move early, move bold, and exit before the music stops. But his success wasn't about timing alone. Zell had spent decades building systems that allowed him to act when others froze. He kept his organizations lean. He avoided excess leverage. He fostered a culture of dissent, where team members were encouraged to challenge ideas, not follow blindly. He called it the obsession with avoiding groupthink. Zell believed that following the crowd was the most dangerous move in any market. When everyone is optimistic, prices inflate and mistakes get covered up. When panic sets in, the truth comes out. That's when he acted, not because he enjoyed the chaos, but because that's when real prices finally revealed themselves. His philosophy was simple, but radical in practice. I don't buy when I'm optimistic. I buy when I'm scared, and everyone else is terrified. Zell's success during down markets wasn't luck. It was preparation meeting volatility. He kept cash reserves ready, structured flexible deals, and never got addicted to momentum. Unlike many of his peers, he didn't fall in love with his assets. To him, everything was for sale at the right price. That cold, calculated mindset didn't make him popular in traditional circles, but it made him rich and, more importantly, resilient. By the end of the 1980s, Sam Zell had become something more than a real estate mogul. He was now seen as a market whisperer, someone who could see turning points before others even sensed danger. But that status wasn't built in boom times. It was forged in crashes, busts, and chaos. In a market where most people chased trends, Zell chased truth. Where most avoided risk, he managed it. Where most saw graveyards, he saw ground zero for opportunity. And that's what made him different. As we move into the next chapter of his journey, we'll explore how Zell scaled his empire, expanded beyond real estate, and taught a generation of investors to think independently, even if it meant standing alone. Because in Sam Zell's world, the crowd is rarely right. And the real value? It's always hiding in plain sight, if you're bold enough to look where others won't. Chapter 3. Scaling the Empire, from Real Estate to Everything Else. By the early 1990s, Sam Zell had already proven that he could outthink, outmaneuver, and outlast nearly everyone in real estate. But what made him truly legendary wasn't just what he did with buildings. It was what he did with businesses. Zell believed that the principles of investing were universal. Whether you were buying an office tower in downtown LA or a struggling manufacturing company in the Midwest, the core idea remained the same: buy what others fear, fix what others broke, and sell when others want in. That mindset gave birth to a new chapter in Zell's empire, one that took him far beyond real estate and into industries few would have expected. At the center of this expansion was Equity Group Investments, EGI, Zell's private investment firm and the brain behind nearly every major deal he touched. With EGI, Zell applied his contrarian lens to everything from energy to transportation, healthcare to media. If an industry was in trouble, he wanted to know why, and if it was a mess that could be cleaned up, he wanted in. One of his most iconic plays outside of real estate came in the freight rail industry. In the 1990s, railroads were seen as outdated, capital-intensive dinosaurs, over-regulated and underperforming. But Zell saw potential. He understood that the core infrastructure still had value, even if the companies didn't. He helped finance a deal that revitalized Anacostia and Pacific, a rail holding company that brought life back to short-line railroads across the country. These assets weren't flashy, but they generated stable cash flow, and Zell knew exactly how to make them profitable. It was the same playbook, just a different field. Zell also made big bets on manufacturing, an industry most Wall Street investors considered dead. He invested in Cyanamid, American Greetings, and other companies that were either distressed or misunderstood. His view was simple: good businesses can get trapped inside bad operations. If you bring in the right management, cut costs, fix incentives, and create discipline, even the most broken companies can turn around. To Zell, value wasn't about trendiness. It was about structure, execution, and being early. One of his most audacious and controversial moves came in 2007, when he led the leveraged buyout of Tribune Company, owner of the Chicago Tribune, Los Angeles Times, and WGN. At $8.2 billion, it was a bold attempt to take a traditional media conglomerate private and make it profitable again. But the timing couldn't have been worse. Within a year, the financial crisis hit. Advertising revenues crashed, print media declined, and Tribune filed for bankruptcy in 2008. Critics called it a massive failure. Zell called it a calculated risk that didn't play out. He never claimed to win every time. In fact, Zell was famous for acknowledging that failure is a natural part of bold investing. What mattered to him was how much control he had going in, how disciplined the capital structure was, and whether the downside risk was survivable. He didn't bet the farm. He bet small, moved fast, and diversified his empire across dozens of industries. This resilience strategy, small bets, smart structures, hard truths, was how Zell scaled without blowing up. Another key to Zell's success was his focus on culture. At EGI, he fostered an environment where people were expected to challenge assumptions, think independently, and never settle for surface-level answers. He discouraged bureaucracy, avoided corporate fads, and demanded intellectual honesty. His offices weren't run like traditional boardrooms. Zell famously wore jeans, spoke his mind, and hated formality. But beneath that laid-back style was a man obsessed with details, data, and performance. Zell's style wasn't for everyone, but it worked. By the late 2000s, his network of companies under the equity umbrella included Equity Residential, EQR, one of the largest apartment REITs in the U.S. Equity Lifestyle Properties, FLS, a leader in manufactured home communities and RV parks. Capital Trust, Covanta Energy, Extran, and other diversified plays in energy, finance, and industrials. Each company followed Zell's formula: own real assets or recurring revenue streams, operate lean, minimize debt, and position for long-term secular trends, not short-term hype. Zell's genius was not just in spotting value, but in engineering durability. While many investors were chasing flashy IPOs or high-growth tech, Zell focused on boring businesses that made money consistently. He didn't care about what was hot. He cared about what could survive and thrive through market cycles. That's why during the Great Recession, when others were panicking, many of Zell's businesses remained intact. Yes, Tribune flopped, but the rest of the portfolio held strong. His REITs had conservative debt. His private companies had liquidity buffers. And Zell himself had the ultimate asset: time. As Zell once said, "I don't measure success by how much I make in a good market. I measure it by how little I lose in a bad one." That discipline, more than anything else, allowed him to scale his empire while avoiding catastrophic losses. But perhaps the most valuable lesson from Zell's diversification playbook is this: you don't need to know the future, you just need to know the rules of value. Whether in housing, trucking, or publishing, the formula stays the same. Understand the asset. Know what it's worth. Control the downside. And move when others freeze. In a world obsessed with disruption, Zell's brilliance was in mastering fundamentals. While others chased innovation, he chased cash flow. While others marketed vision, he executed strategy. And while others sought popularity, he sought truth, even when it meant going completely against the tide. This wasn't just business. It was personal. Zell never forgot where he came from. He remained grounded, gritty, and unafraid of confrontation. That edge, the immigrant toughness, the investor skepticism, the operator's eye, never left him. And it's why, even decades into his career, he remained one of the most respected voices in global finance. In the next chapter, we'll dive into Zell's legacy, his worldview on risk, success, and independence, and the most powerful lessons he left behind for future generations of entrepreneurs and investors. Because Sam Zell didn't just build a portfolio, he built a philosophy. And that philosophy might be more valuable than any skyscraper he ever owned. Chapter 4. The Legacy of Sam Zell, Philosophy, Failures, and Final Lessons. Sam Zell was more than a billionaire real estate mogul. He was a force of nature, equal parts capitalist, contrarian, and philosopher. While others played by the rules, Zell rewrote the game. And in doing so, he left behind not just a fortune, but a playbook that continues to inspire generations of entrepreneurs and investors. His legacy wasn't defined by any single building, company, or deal. It was defined by how he thought, how he approached risk, how he challenged consensus, and how he turned discomfort into a competitive edge. Zell believed that success wasn't about following trends. It was about understanding value. "I'm a professional opportunist," he once said. "I don't predict the future, I react to the present with a long-term lens. That mindset gave him an uncanny ability to spot opportunities hiding in plain sight. Where others saw broken markets, Zell saw mispricing. Where others feared volatility, he saw windows for control. And where others waited for certainty, he acted on conviction. But Zell's most important lesson wasn't about timing markets, it was about understanding yourself. He knew that fear governs most decision-making. Investors panic. Executives hesitate. Bureaucracies freeze. Zell trained himself and his team to do the opposite, to stay calm when chaos erupted, to ask the hard questions, and to never let ego block execution. This mindset came with costs. Zell made bold moves that didn't always work out. The Tribune media buyout in 2007, which ended in bankruptcy, remains a cautionary tale about leverage, timing, and hubris. But even in failure, Zell didn't flinch. He owned his mistakes. He learned from them. He moved forward. Zell often said, "The key to life is not how well you do in the good times. It's how well you handle the bad ones." That ethos of resilience, realism, and relentless curiosity ran through every chapter of his life. Born to Jewish immigrants who fled Nazi Germany, Zell was raised to value freedom, education, and independence. He wasn't handed wealth. He built it. Through hustle, through grit, through relentless study of how the world really worked, not how it appeared to work. He wasn't impressed by credentials. He didn't care about appearances. What mattered was truth, data, execution, and freedom above all. Zell famously avoided public markets unless absolutely necessary. He preferred private deals, where he had control and flexibility. He hated bureaucracy and red tape. He believed that the fewer people involved in a decision, the better. Simplicity wasn't a tactic, it was a principle. He surrounded himself with people who could think independently, challenge him, and execute ruthlessly. Ego wasn't welcome. Honesty was mandatory. Zell also understood the value of culture. Not the feel-good corporate lobby kind of culture, but the type that rewarded ideas over titles, action over theory. He created workplaces where smart misfits could thrive, where being weird was a sign of strength, not something to hide. That culture became his competitive advantage. But for all his brilliance, Zell never lost his edge. He never became complacent. Even in his later years, he remained fiercely opinionated, unapologetically blunt, and always looking for the next opportunity. Until the very end, he kept investing, kept learning, kept pushing. His death in 2023 marked the end of an era, but not the end of his influence. Today, Sam Zell's philosophy lives on, not just in the companies he built, but in the mindset he championed. Think independently, especially when it's uncomfortable. Act boldly, but control your downside. Avoid fads. Embrace fundamentals. Be honest with yourself, your numbers, and your people. And never, ever follow the crowd. Zell once said, "If everyone is going left, I look right." Not to be difficult, just to be sure. In a world where the noise of conformity is louder than ever, that lesson may be his greatest gift. So if you're watching this and dreaming of building something big, whether it's a real estate empire, a startup, or a new way of thinking, remember Sam Zell. You don't need to be the loudest voice. You don't need to be the trendiest idea. You just need the courage to see clearly, think for yourself, and move when others freeze. That's the bold step forward Sam Zell took. And it's one you can take too. If you found this story powerful, hit that like button, subscribe to Bold Steps Forward, and share this video with someone who needs a dose of bold thinking today. Stay tuned for more legendary stories of business icons, strategic minds, and the timeless principles that built empires. Until next time, keep thinking different. Keep moving.